Hello everyone, I'm Joel, your host for Talking Trends, where we break down the latest real estate trends, market insights, and luxury lifestyle updates across the greater Sarasota area. Today, we're diving into one of the biggest topics affecting Florida homeowners and buyers, the state's proposed property tax changes. First, the most important thing to know is this: Florida has not eliminated property taxes. Nothing has changed yet for homeowners, buyers, or sellers. What has happened is that the Florida Legislature approved a proposed constitutional amendment that will now go before voters in November of 2026. If approved by at least 60% of Florida voters, the amendment would significantly expand the homestead exemption on the non-school portion of property taxes. The proposal would increase the exemption to $150,000 beginning January 1, 2027, and then to $250,000 beginning January 1, 2028, with future adjustments tied to inflation. That distinction is important. This would not eliminate school district taxes, and it would only apply to qualifying homestead properties, meaning primary residences, not second homes, investment properties, or vacation homes. Another key detail: residency timing matters. Under the current proposal, Florida residents who have established residency by December 31st, 2026 would be eligible for the expanded benefit. New Florida residents after that date would initially receive the current $50,000 exemption and would need to maintain Florida residency for 5 years before qualifying for the full expanded exemption. The proposal also includes a change for non-homestead properties, including commercial properties and second homes. Currently, those properties can see tax-assessed values increase by up to 10% per year. Under the proposed amendment, that cap would be reduced to 5% beginning in 2027. So what does this mean for the real estate market? For Florida homeowners, especially longtime residents with homestead protection, this could offer meaningful relief and lower the cost of ownership. For buyers relocating to Florida, it adds a new layer of timing and planning. Establishing residency before the deadline could become an even bigger consideration. For sellers, this may strengthen demand from buyers who are trying to secure residency before the end of 2026. And for luxury markets like Sarasota, Longboat Key, Lakewood Ranch, and the Barrier Islands, this could become part of a broader conversation around long-term ownership costs, residency planning, and Florida's continued appeal as a tax-friendly state. At the same time, there are still open questions. Local governments rely heavily on property tax revenue to fund services like public safety, infrastructure, storm water management, roads, and other community needs. The proposal includes language about prioritizing remaining revenues for essential functions, but the long-term impact will depend on voter approval, implementation, and how local governments adapt. The bottom line: this is not law yet, but it is something every Florida homeowner, buyer, seller, and investor should be watching closely. As always, our role is to help you understand not only what is happening in the market today, but what may shape the market tomorrow. If you have questions about buying, selling, relocating, or how this proposed amendment could impact your real estate plans, we're always here to help. I'm Joel Schemmel with the Schemmel Soda Group at Douglas Elliman, and that's your latest Talking Trends.